All right, let's jump right into Wallbox's latest quarter. We're going to break down their Q2 2025 results, and really, it's a story about a company trying to pull off a huge strategic shift in a super tough market.
So here's the big question right off the bat. Wallbox actually beat on their earnings per share, which is great, but they missed on revenue, and the market did not like that. So why the big drop? That's the puzzle we're going to solve today.
Okay, so let's start with the good stuff. Now, the company posted a GAAP EPS loss of $1.92. Yeah, it's a loss, but here's the thing. That was a 79-cent beat compared to what analysts were expecting. That's a big deal, a clear win for them. But the market just didn't seem to care. After the earnings call, the stock took a hit, dropping almost 5%. And that reaction, it tells you everything. It tells you investors had their eyes on something completely different. And that, right there, is where our story really gets interesting.
So here's how we're going to tackle this. First, a quick snapshot of the numbers. Then we'll look at what management said versus how the market reacted. We'll dive deep into their big strategic pivot, cover the broader context, and then wrap up with our take and a little trade idea.
All right, first section. Let's get right into the Q2 scorecard and break down the hard numbers.
Okay, this table really lays out the whole story. Look at the revenue line, 38.3 million euros. Now, that did miss what Wall Street was expecting, but here's the kicker. It was right smack in the middle of their own guidance. Same goes for their gross margin and their adjusted EBITDA. So what's the takeaway? Simple. Management did exactly what they said they would do, but the market wanted more.
And you can bet management was shouting this from the rooftops. They were really focused on showing off their cost control. I mean, a 33% improvement year over year in their adjusted EBITDA loss. That's a pretty clear sign they're tightening the belt. They got labor and operating expenses down by 25% compared to last year. That's some serious discipline.
And this all leads us to the two completely different stories of this quarter. You have management's narrative, and then you have the market's very different reaction.
I mean, the difference is just night and day, right? On one hand, you've got management saying, hey, we did what we promised. We're being efficient. But on the other hand, you have the market looking at the same report and saying, yeah, but your growth is hitting a wall, and they hammered the stock for it.
And if you listen to the call, you heard CEO Enrique Asusun say it over and over again. The phrase was, within our guidance range. For him and his team, this was all about executing their plan and managing the business in a really tough environment. The market, it just had a one-track mind. Growth, growth, growth.
Okay, so this brings us to what I think is the most critical piece of the Wallbox puzzle right now. We're talking about their massive strategic pivot, moving beyond just being a company that sells chargers.
At the heart of this whole thing is something called bidirectional charging, or V2G. Now, this is a game changer. It's not just about pumping electricity into your car anymore. It's about your car being able to send power back out, back to your house, or even back to the grid. It's like turning every EV into a mini power plant on wheels. This completely changes how we think about electric cars.
And Wallbox's golden ticket to this future? It's the Quasar 2. This is the first of its kind to actually be delivered here in North America. Just imagine this. The power goes out in your neighborhood. No problem. Your Kia EV9 plugged into a Quasar 2 could literally power your entire house for a few days. The first ones are already getting installed, and you can tell management thinks this is where the real growth is going to come from.
But that's not all. The other huge piece of this new strategy is the virtual power plant, or VPP. Now stay with me here. Picture thousands of these Quasar 2 chargers all connected. What you've just created is a giant, decentralized battery. The utility company can then tap into that network when demand is super high, helping to keep the lights on for everyone. It's brilliant.
And this isn't some far-off dream. Wallbox is already doing it. They've launched these VPPs in California and New York. And this is the key. It's not just a fancy feature. It's a whole new business model. It means they can make money, recurring revenue, from software and services on chargers that are already out there in people's garages. And it's working. That part of their business grew 27% year over year. That's a huge bright spot.
Of course, this amazing pivot isn't happening in a bubble. We have to talk about the really challenging market they're operating in.
Man, it has been a bumpy ride for them lately. They had to do a 1-for-20 reverse stock split. Now, that's a move companies make to boost their share price, usually just to avoid getting kicked off the stock exchange. It's not exactly a sign of strength. And all of this is going on while EV growth is slowing down in the US and the recovery in Europe is, Let's just say it's been choppy.
So you've got this push and pull, right? They're fighting headwinds and catching tailwinds all at once. Europe? That's a bright spot, showing strong recovery. But North America? That growth is stalled out. On the plus side, they managed to secure $15 million in new financing, which is a crucial lifeline. But let's be real, the whole industry's feeling the squeeze right now.
Okay, so after all that, what's our call for the next quarter? Let's get into it. Here's our take. We're putting a market perform rating on the stock. Look, we think this pivot to energy management is 100% the right move for the long run. But it's still super early. The top-line growth is weak, and there's a ton of risk in actually pulling this off. So for now, we're happy to just watch from the sidelines.
So, what about Q3? Management's guiding for revenue between 38 and 41 million euros. Honestly, we're penciling in a number toward the low end of that, maybe around 38.5 million. We do think they'll keep a tight grip on costs, though, so their adjusted EBITDA should land right where they said it would.
If there's one thing you need to watch, it's this. Are people actually buying their bidirectional chargers? We need to see real orders, hard numbers for the Quasar 2 and their other DC chargers. That's what will tell us if this whole strategic pivot is the real deal, or just a good story.
All right, and to wrap things up, let's talk about a speculative trade idea that comes out of all this analysis.
Okay, so here's the idea. And let me be clear, this is speculative. The whole thesis is that the market is looking at Wallbox like it's just a boring, low-growth hardware company. It's completely ignoring the massive potential of its software and V2G platform. So a higher-risk way to play this what-if scenario could be buying some long-dated, out-of-the-money call options. This gives you leveraged upside if that V2G story really starts to take off and the stock gets a major re-rating from Wall Street. But again, and I have to say this very clearly, this is a high-risk idea. This is not financial advice.